wow, do we have a lot to talk about tonight. Now, I realize that George Gammon is also doing a live streaming show. I apologize for my listeners who like to get both. I guess you could just check out the replay for one or both. I was talking with George about maybe coordinating. Maybe he will be my co-host and we'll restart the Welcome to Dystopia, gallows humor, and sarcastic financial news show. We'll see. I'll have to talk to him about that more. Okay, so today has been a very interesting day with markets and Cerveza-related news. First, let me talk about some of the regular markets. So, U.S. down. The U.S. stock market, some of the general U.S. stock market indexes are down around 1%. The S&P 500 is down minus 1.05%. The Dow is down a little bit under 1% at 0.78%. The NASDAQ is down almost 2%, where recently, maybe I'll do a short video on this. A magazine cover came out talking about how these technology companies like Microsoft, Apple, Google are potentially going to have $2 trillion market caps. So that's normally, these magazine covers are normally not good reliable indicators. The Russell 2000 small cap index is down around 1%, minus 1.03%. Oil has had a little rally, and by the way, for my Patreon account contributors, almost 300 of them now, I released this late last night. I spent a lot of extra work doing this. There is about a 15 or 16 minute, I think, update on the oil market with some interesting ideas to protect yourself if you're looking for dividend yield. Potentially, maybe, again, I don't advise people to short in this market. I think it's very, very dangerous to short, especially for retail investors. There is some interesting companies to avoid. If you're a very aggressive trader, maybe some potential longs if there is blood in the streets in oil. I'm not buying any oil stocks right now. I think there's going to be a lot more blood. The Global Times today, which is China's state-run media, one of the main ones, they just put out on their Twitter feed a story that there are 19 new hospitals that they're going to be building outside of Wuhan. So things in China are not better. They're not going to get back to work en masse in these factories in 2 weeks. They're not going to start flying all over the world with planes. They're not going to start driving cars from city to city, moving goods. This thing in China is still a mess. South Korea, the amount of spreading of the Cerveza problem in South Korea is starting to go crazy. Shout out to Chris Martinson, who is doing an unbelievable job. Literally God's work. Unlike Lloyd Blankfein, Chris Martinson is actually doing God's work, and I think Chris Martinson's actually going to save lives, unlike Lloyd Blankfein, who said he was doing God's work, the former Goldman Sachs CEO. Just ridiculous what Lloyd Blankfein said. Chris Martinson is doing all that hard work for free. He's not making a cent off any of those videos. They're all demonetized. So he's trying to help people, warn them, get people good analysis, and keep track of the news and all the crazy things that are going on that are Cerveza-related problems. So you have government bureaucrats just screwing things up in Japan, mishandling of the quarantine. You have problems in South Korea. Now it looks like there's cases in Italy and Iran. Obviously, those two countries, they do a lot of business with China. Italy was the first G7 country to be in the Belt Road Initiative, so the Chinese government officials have been in and out of Italy. Italy's been looking for bailout dollars for well over a year, and Iran, the Chinese oil companies buy a ton of oil from Iran. Almost all the oil from Iran goes to China, if I remember correctly. So there's been an enormous amount of travel from Chinese people for months, for a long time, way before China cared about the Cerveza problems, when they let it go out of control for the first, 6 weeks or so, before they started to do anything in Wuhan and other cities, that there was lots of travel to those places. Also, rumors now, too, of problems in San Diego County. My buddy, shout out to Brian, he put a Facebook group for Cerveza problems. You can look it up with the real name on Facebook. I think it might be shadow banned though, but you may be able to find it in search. And he's doing an unbelievable job of finding videos and news stories, collecting with a lot of the new information. And someone in the group shared that they have a brother working in a San Diego County hospital, and there's a ton of CDC officials crawling all over the hospital looking for, and there's a lot of patients apparently with quote unquote severe pneumonia. in San Diego. So that's being buried. I mean, these government officials are all scumbags. I don't like any of these governments at this point. It's just ridiculous. They care more about themselves and, not the truth. It's just ridiculous. Okay, I'll get off my soapbox. Again, for Patreon account contributors, there is an oil podcast that's for Patreon account contributors only behind the paywall. And also, I may have another one in the next couple days that's related to some interesting insights from Franco-Nevada. Because if you're not aware, I did just get followed on Twitter in the last couple days by Kyle Bass. So I'll talk about that more behind the paywall. But let me get to today's show. So gold is rallying a lot. Gold is well above 1,600 in US dollars. It's at 1,645. But what's interesting, it seems to be that the market is a lot of professional money managers. First of all, if you don't understand the career risk a professional money manager can go through, if a professional money manager sticks their neck out and makes a big bet and is wrong, so if they leave the herd and they take a calculated risk or not so calculated risk, and they're really, really wrong on a bet, and it's a big bet, the professional money manager can not only lose assets under management, but maybe never work again in the industry. So a lot of professional money managers are losing their jobs anyway due to passive investing, index funds, high-frequency trading algorithms. So the few humans that are left in the industry are at risk if they stick their neck out. And so I think what's happening now with the price action I'm seeing, I think what's happening is that more and more professional money managers who were not... I'm trying to think of the right phrase here, who did not think that the cerveza problems in China and other areas were nearly as bad, were not as bad. So they were believing the government numbers. But now I think that the press release is coming out from the Global Times that there's 19 new hospitals going to be built outside of Wuhan. That press release came out, I think, at noon today. So this is very, very serious still in China. There's rumors from my top source in China that Beijing is on partial lockdown, and also the Jennifer lady who's translating a lot on Twitter, she has enormous Twitter following now, and she's translating a lot of the Mandarin of the videos and the Chinese government press releases about cerveza problems. And she's saying that Beijing could be on lockdown, full lockdown in the not too distant future, that there's rumors that it could go on full lockdown because there's been more cerveza cases, more people getting cerveza sickness this week. So things are going to get worse before they get better, and there's press releases from Western companies about, factories or a lot of factories are not restarting. I'm seeing all over Twitter from small business owners and entrepreneurs that their friends who have business investments or have factory relationships in China, that they're not getting any deliveries. Those factories are still shut down. They don't have a timeline. So that to me means that, oil, natural gas, copper, base metals, I'm not bullish on any of those things. I'm not managing any money professionally or anything like that. So I'm not short any of those things, but if I was managing money, I would probably consider being short those things, but I'm not short any of those things right now, but I'm not long those things either. I think there's going to be a lot of volatility in those commodities, and if you made me make an educated guess, I would probably say those things are going down. So let's talk about the dollar index first, and then I'll talk about treasuries there, as you can see on your screen. So for those of you who are not aware, the dollar index, which is DXY, has been over 99 on the dollar index now for 9 straight days. The dollar index is at 99.34 now. It has been above 99 now for 9 straight days since February 12th. And what that means to me, if you look at technicals, is that the dollar index is staying above 99. There is a lot of flight capital, especially from professional money managers more than retail investors. A lot of flight capital from professional money managers who had been prior to cerveza problems in China, or they didn't believe the cerveza problems in China were that big a deal, or they didn't think the cerveza problems would spread from China to the Diamond Princess cruise ship in Japan and then spread to South Korea, and now we're seeing stories of cases in other areas. And so those people now have switched their bets. They have closed out, a lot of those professional money managers have closed out being long maybe emerging market stocks. They're out of emerging market stocks, and they're out of commodities trades, except for maybe gold, from what it looks like from price action. Maybe some people did buy the oil rally a little bit. The oil price has rallied a little bit, but I'm still extremely skeptical that the bottom in oil is in the stuff I'm hearing from the supply chain, the manufacturing base in China is not good, and travel restrictions and stuff. So I'm not bullish on. There was another data point that just came out about auto sales in China, so I'm not bullish on oil anytime soon. I think there's going to be more blood in the streets, and as I talked about in the podcast for Patreon account contributors, I think it will start to really, really hurt the higher cost, bad balance sheet shale oil producers. And I named some names in the Patreon account podcast. Okay, so dollar index is strong. It is building a base. If you are a dollar bull, people like Raoul Pal, who's a former hedge fund manager, co-founder of Real Vision TV, Shy Girl, who's on Twitter, she's an oil fund manager, she's done interviews for Macro Voices and others. You think that the dollar index now is building a base? Brent Johnson, my friend Brent Johnson, Dollar Milkshake, that this is just the beginning for the dollar rally. However, if the dollar index continues to drastically strengthen, it's going to do immense damage. You have a situation now where emerging market companies and emerging market governments are looking at the dreaded triple whammy. And so what I mean by a triple whammy is you have dollar rally, dollar getting stronger, you have the too much dollar denominated debt in these emerging market companies and emerging market countries. You have China slowing down. China's basically in lockdown. So before cerveza problems in China 6 or 7 weeks ago, China was already slowing down and contracting. I have a bunch of research and videos on my YouTube channel over the last year documenting a lot of these stories compared to a lot of the other gold and alternative media channels. And then finally, for a lot of these emerging market companies and emerging market countries, a lot of their business is exporting, and a lot of their major customers are exporting either commodities or luxury goods to China. And with China slowing down, there is not the ability for the Chinese consumer and Chinese companies to either import as many commodities, especially energy and base metals, and also luxury goods, because they're not profitable. I mean, we're hearing stories now. There's video now on Twitter. I'm not sure if it's obviously it's going to be tough to vet it. My friend Brian, who lived in China, who has the Cerveza Problem Facebook group, he said that it might be a government building, but there's new video going around of many thousands of people protesting in China outside either a government building or a bank at a bank run. It's many thousands of people. There's a video that I downloaded it. It's in the Wall Street for Main Street Facebook group, so you can go and watch it there. I also have a second video of people being carried away by police, and obviously everyone's wearing masks. So emerging markets and emerging market money managers, people who are invested in emerging markets, are looking at a triple whammy because of dollar rally, strong dollar, China economy basically on lockdown, and commodities in especially energy and base metals. So your natural gas, your oil, and your copper and base metals in much worse bear markets than anyone thought. Oil was rallying until cerveza problems in China. Oil looked like the bottom may have been in, except that I was not nearly as bullish on the Chinese economy. So all those people that were saying that the bottom was in oil 7 weeks ago, they looked right for 2 or 3 weeks. They had a nice little run there. They were doing very well, but I was skeptical. I was warning people that, look, I didn't know about the cerveza problems at the time in China, but I was like, look, the Chinese economy is having a lot of problems here. So for this oil rally, I mean, we're seeing the auto sales data out of China, and it was not good. So the auto sales data was declining rapidly. The auto sales data in many aspects here for the U.S. is not doing as well either. I talked about that on yesterday's live stream show. It's a lot of red flags there. So triple whammy for emerging markets now because of too much dollar-denominated debt. And then you have the strong dollar. China's economy is on lockdown, but it was contracting before that, before cerveza problems. And then commodities a lot of commodities except for gold in a bear market. So that's really bad. Worst case scenario for emerging market companies, emerging market governments. Finally, let's talk about the 30-year US Treasury. So the 30-year US Treasury today got down to an all-time low. And this is a combination of factors. Like a lot of things in life, it's almost never one thing. It's a combination of factors. You have money coming in to the US, you have those professional money managers who are closing out those positions in emerging market stocks, in energy stocks, in base metal stocks, in any China related stuff. If any people were actually still long that, maybe there were people buying the bottom who actually believed the press releases from the Chinese government. And those people, now that probably the Global Times article came out about Wuhan and the other stuff we're seeing out of South Korea and Japan, those people have closed out those riskier positions, and they are going to cash. They are going to 10-year U.S. Treasuries and 30-year U.S. Treasuries, and they are going to gold. That's what it looks like to me today for the price action. And the 30-year U.S. Treasury is down to, I think it got as low as 1.886, but you just rounded up to 1.89. So not only do you have that, you also have comments today with the price action and the money managers. You also have comments from Lael Brainerd. So like I've been saying for about a year now, Lael Brainerd has been trying to get promotions. So when the Democrats actually either control the White House again or have a majority in Congress, she can either be Treasury Secretary or the new chairwoman of the Fed. And she gave a speech today in New York talking about Treasury yield caps and more inflation. So it's a combination of factors. This is like full Japanification, and I've been talking about this for a long time with financial repression and where the central banks get to an end game where they manipulate interest rates as low as they possibly can so big governments don't have to cut back on spending, and over-indebted corporations don't have to write off bad assets and go bankrupt. So this is the last couple innings of the game unless there's a new reset. There's a new global financial reset or a new system, or I don't think there can be the exact type of debt jubilee, because a lot of people still are owning debt, and you're seeing a lot of people actually buying debt right now. The TLT, which is Larry Tom, that's the iShares 20-plus year Treasury bond. That thing has had an unbelievable rally over the last year. It was at $118.66 a share on February 29th, 2019, and it's up to 148.04 over the last year. Let me look at another chart here. It bottomed December 31st, 2019 at 135.48, it looks like, and it's rallied again. So just in the last almost 2 months, it's rallied pretty strongly too. So people are betting on a Treasury rally, and that's for capital gains on Treasuries. People are not buying Treasuries for yield, really. Although on a relative basis, the U.S. still has a positive nominal yield compared to the rest of the world, but people are buying Treasuries now for capital gains. But the government doesn't want to pay yield if they're doing financial repression. They want to drive down interest rates. The government and central banks want to drive down interest rates. So she gave a speech, and you can read more about it. This is end stages of Japanification. Japan has been doing this for longer than anyone else. And David McElvaney of McElvaney Weekly Commentary released a podcast this week talking about these average inflation targeting, where the Fed will actually shoot for well above 2% inflation. So the average inflation is above 2%. Because the official government inflation rate is actually below 2% right now, even though everyone on Main Street knows that that's a lie. But the Fed is talking about targeting much, much higher inflation targets. So the average inflation then is going to be well above 2. Welcome to dystopia. Oh, and I didn't mention the dollar bears argument. So you have dollar bulls, and I laid out the case there. Dollar bulls think that now that the dollar index has closed above 99 for 9 straight days, that it's building a base and it's going to go higher. But what they probably don't understand, and this is why I'm in the dollar neutral, dollar tug of war camp, is that the US Treasury, to try to save the rest of the global economy from totally collapsing immediately, there's games that they can play. So when a government, especially a big government like the US government, but every government to at least a certain extent, tries to manipulate their currency, manipulate their exchange rate, especially against like the dollar or the euro or other major trading partners. So I don't think the Federal Reserve, the US Treasury, the Trump administration, President Trump, are going to let the dollar continue to rally massively without doing without at least attempting massive amounts of intervention. And there's a bunch of policy tools they can do. If the yield curve doesn't go the way they want, if it does go further inverted, then they can cut rates. So I think the market, the Fed Fund futures, say that 3 times fast. I think the Fed Fund futures is pricing in, I think, 1 rate cut this year in the next like 3 or 4 months. But they can do more. There's other tricks that they can do. I don't know if we're to the levels yet of potentially a plaza accord, but if things get bad enough, they potentially could do that. And, oh yeah, I was going to bring up dollar bears. So dollar bears are like, well, this 99 is just the last rally. So your Luke Gromans, your Lynn Aldens are like, well, the U.S. government is running these unbelievable budget deficits. The Fed balance sheet is still very high, although surprisingly, when I looked at the Fed's official balance sheet again recently this week, the Fed's official balance sheet dropped again. It dropped about 11 billion from 4.182 trillion down to 4.171 trillion. And that's in spite of some oversubscribed term repos. Now, the term repos are being trimmed. So there still is term repos. They're being oversubscribed, but the size of the term repos are being, the 14-day and 15-day, I think, term repos are being trimmed. But what we're not seeing on here, and they haven't officially, I haven't seen any announcements to see if this officially stopped. But what we're not seeing on here is the $60 billion per month in not QE of US Treasuries that the Federal Reserve is supposed to be buying. So the Federal Reserve balance sheet has basically been in a trading range now, I would say, since the end of December 2019. So on their official balance sheet update on Wednesday, December 25th, 2019, the Fed's official balance sheet was at 4.165 trillion. And here we are almost 2 months later, almost exactly 2 months later, and the official balance sheet is still it's barely a couple billion, it's barely $6 billion. So it's only 6 billion net, 6 billion higher officially. It's at 4.171. So 2 months later, and I don't see any evidence of the 2 months of $60 billion per month in not QE US Treasury purchases. There should be another $120 billion total for 2 months now in Treasury purchases. Where did those go? The Fed balance sheet should be approximately $120 billion higher now. So more and more likely that the Fed's official balance sheet is becoming more and more misleading. I didn't really believe a lot of it anyway, but the Fed over the last 5 or 6 months has been more cognizant that people are paying attention to the official balance sheet, which means because they've discussed it publicly in Fed minutes and in interviews, that they've claimed that people are paying way too much attention to our balance sheet. That's what they've talked about. Robbie says repo is off-balance sheet accounting. Actually, according to Danielle DiMartino Booth, formerly of the Dallas Federal Reserve, and George Goncalves, formerly of the Dallas Federal Reserve, and others, that the term repos, a 14-day term repo or more, are supposed to count on the Fed balance sheet. Are supposed to count on the Fed's official balance sheet. So the 30-year U.S. Treasury, you have a lot of flight capital from professional money managers coming in. And the dollar bears are saying that this is the last dollar rally. But they are also saying that the Fed will eventually intervene and prevent the dollar from rising any further. But we don't know any timing on that. They could let the dollar go to 101, 102 before they do anything. We don't know. We don't know when they're going to come in and start messing around with the exchange rate. But I can tell you President Trump's not happy with what the dollar is doing, because he normally tweets about it frequently. $7.82 says, someday Peter Schiff will be correct. Someday. He may be correct on a number of things, but he's not going to be correct on China. Oh, you're seeing a 30-second commercial, 30-second car commercial now? Well, hopefully this video is not demonetized. I have remembered so far to only say Cerveza problems, but you never know what gets demonetized anymore. So if the dollar continues to rally and more flight capital from professional money managers, closing out other riskier risk-on trades or investments like emerging market stocks, commodities, certain types of commodities, comes to the US, we could see yields go lower. And ultimately, this is what the U.S. federal government wants. It wants to keep borrowing record amounts and pay as low an interest rate as possible. David McElvaney talked in his podcast this week about how more and more PhD economists at the Federal Reserve and IMF and stuff want to go negative interest rates and in higher inflation targets. So the worst of both worlds. Just truly dystopian. To try to force people to spend the stealth tax, the inflation tax, just ridiculous. Meanwhile, in China, there's a lot of studies, and I'm hearing anecdotal evidence that a lot of Chinese firms, if they don't get more and more bailout money soon, a lot of Chinese firms in the next 3 months could be out of cash. Start firing massive amounts of workers, could be out of cash. So the People's Bank of China and the Chinese government are going to have to do all types of schemes, all types of loan forgiveness or rent freezes or bailouts. I mean, they've already been doing that before the Cerveza problems. That started about 7 weeks ago. But, I mean, they may have to ramp it up enormously. Absolutely enormously. But they cannot, for those of you who are not familiar with this, the People's Bank of China and the Chinese government cannot print dollars. So they cannot help with the dollar-denominated debt. They can help with any RMB debt, any bank accounts that have problems that are blowing through their yuan, but they cannot deal with the dollar-denominated debt. They can't print that. And they normally use those dollars to buy commodities, which is going to put pressure on some commodities. Robbie says this channel is gold. Great commentary and research. Thank you. You're welcome, Robbie. I appreciate the kind words. Okay, I got a bunch of super chats here. Let me check out the super chats. And wow, I have a lot of energy today. It's really good. My voice is not going. My focus is good. Okay, let me count on my super chats. 1, 2, 3, 4, 5, 6. I think we got 12 super chats. Very nice. Okay, Primal American says we are in the end days. Yeah, I mean these governments are running out of tricks. There's already lots of anecdotal evidence that all these bureaucrats in charge of the Cerveza problems are screwing things up royally in Japan, in South Korea, in China, now in the US, and I'm sure elsewhere. And then the financial situation now out of China looks real. I mean, China was already having a lot of problems. I did a video that before the Cerveza problems, China was already doing all these bailouts, but the economic consequences with the manufacturing shutting down and Chinese economy on lockdown has exacerbated the problem enormously. Jose says, thank you so much for your info every day. You're welcome, Jose. Primal American says he's shorting the S&P 500. I would be careful about that because you could maybe hedge. You can buy some puts. You can buy some calls, just in case. Because you don't know if QE is coming. You don't know. Because if the dollar gets too strong, I could see the Treasury or the Fed do heavy intervention and announce some type of new program to drastically devalue the dollar quickly. So you might want to have a hedge in place. That's just my opinion. Maybe some calls out of the money or something like that, because they're probably cheap. Primal American asked, do I think China created the problem? it doesn't really matter. In my opinion, it doesn't really matter how the Cerveza problem started. It's how all these governments are screwing things up now. It doesn't matter how it started. China didn't do anything for at least 6 weeks. Japan is screwing things up now. Their quarantine was a joke from what it looks like on the Diamond Princess cruise ship. South Korea is having problems. The US, there's rumors now of a big outbreak in San Diego that I talked about. Look, if all these government bureaucrats that are, Chris Martinson talks about this on his videos, that are unqualified and inexperienced with dealing with a quarantine, if they're in charge and they're not listening to the people there, if they think that this is a normal Cerveza problem and that only a 14-day quarantine is needed, there's a lot of evidence already that people can be asymptomatic for 24 days. So a 14-day quarantine is not going to mean anything. There's been cases already where someone got out of a 14-day quarantine and then the symptoms came the next day. Oh yeah, don't forget to hit the like button. Smash the like button. I keep forgetting that. I focus on the content. Want to know if they made the Cerveza problems in a lab. There's some anecdotal evidence that Chinese spies stole it from a lab in Canada, and there's more anecdotal evidence that it may have been modified in Wuhan. And I don't know how it got out. I don't know if it was like, there's some news reports that some infected bats were sold by unscrupulous, immoral lab workers for extra profits at like a rare animal meat market. There's some rumors of that, but it could have also been like an employee, because this stuff is this strain is super infectious. That someone could have been infected through their lab gear, not known, and could have just walked out of the facility. Carlos asks, what do I think of the rumor that Ripple, XRP, global currency, and Mar-a-Lago, the next Bretton Woods Accord? He says, keep up the good work. Thanks. You're welcome. I haven't heard that rumor, but it doesn't fit in with crypto yuan that the Chinese government's launching. It doesn't fit in with crypto euro that the European Central Bank is studying. It doesn't fit in with national cryptocurrencies. That would be my opinion. It doesn't fit in. Now, I know that the XRP crowd wants to say that Bill Clinton and Ben Bernanke and those guys, that means it's guaranteed. I mean, those guys were on the board of directors. Some of those guys were on the board of directors at Theranos, and Theranos was a fraud. Theranos collapsed. So just because those guys are on the board of directors and those guys are getting paid to endorse it doesn't mean that it's going to win. It looks to me like there's going to be national cryptos. It's all about restricting freedom, control, power, and tax revenues. No, I don't think the Cerveza problem was created to be blamed for the coming economic collapse, because I don't think that the Chinese government would voluntarily collapse their own economy. I really don't think that. They want the economy to restart, actually. They're trying to restart the economy so they could start earning dollars again and start trading. So they're trying to sell the narrative that they've reduced the amount of, at least for a while, that they reduced the amount of people infected and the people dying. I got another super chat for $24 from Primal American. Thank you very much. Another $10 super chat from NANA. Lunch is on me. Thanks for your work. You're welcome. I don't know how to... Oh, man. I'm so untech savvy here. I don't know. Now that I clicked on the super chat thing, I don't know how to get the window off. YouTube's going to force me to switch over to the new YouTube Studio software, and I'm not sure how it's going to integrate with OBS, my live streaming software. I'm going to have to look up OBS to see on the help website to see how OBS works with the new YouTube live streaming software, the YouTube Studio. I think they're going to force me to use that stuff. There we go. I got it down. That's ridiculous. I don't think a crypto-backed precious metal would be a good idea. Maybe digital gold receipts, digital silver receipts. They could do that on your smartphone. So you have a smartphone program, right? And we audit the gold and the silver, and people don't trade the gold and the silver. They can get redemption, and the digital receipts for the gold and silver are on your smartphone. And so you can trade receipts, and then if you want that... In an ideal society, that's what I would like. But I don't think anyone's going to... I don't think the governments want that either. Okay, I think that's enough for this live stream show. And maybe I will hop on and get this other podcast done for my Patreon account contributors maybe later. Before dinner, after dinner, we'll see how I feel. So I want to thank very much my over 250 Patreon account contributors. It actually might be 300 very, very soon. It's growing a couple a day. Thank you very much. So I can focus on content, research, information, analysis, and financial education just like this. And then maybe one day I'll actually be able to raise some money for my educational technology company with virtual classes. Michael asks, what do I think of Jim Cramer? I've talked about this many times. I think he's a highly paid clown. He even has the buttons and the sounds. And even dresses up. He's a very smart guy, but I think he's morally bankrupt. He has a law degree from Harvard too, right? So he can argue any position, bull or bear. But, I mean, his moral compass, I think, has been broken a long time ago. Yeah, now that I said that comment, well, I've already turned down CNBC years ago. I used to be friends with Michelle Caruso Cabrera. I used to speak to her in a lot of emails. That was a long time ago, though. I think she's running for Congress now. I hope she beats AOC. I don't think she will, though. That congressional district is rigged. I think the gold bull market's restarted, and I think, the next few years are going to be good for gold. It's going to be very volatile, though, because the paper price of gold is still manipulated. Let me see the price of silver. See if silver actually had a little rally. Oh, silver stayed above 18. Oh, silver. Silver had been struggling to stay above 18. Good for you, silver. Good for you. Watch this like tomorrow. Not tomorrow. Maybe like Sunday or Monday. Watch this like silver gets the whack-a-mole and is below 18 again. They're really fighting really, really hard to keep silver under 18. One of these days, hopefully in the near future, it will stay above 18 and then get to 21, 22, 23. Then maybe off to the races 6 to 12 months after that. We'll see. Okay. I think that's it for right now. All the articles, if you want to read more about this, will be in the information and description section. And again, thank you very much to my dozen or so monthly PayPal contributors and all my patrons. And there is a lot of good audio podcasts and articles on a number of different topics behind the Patreon account paywall, just in case YouTube decides that they're going to start demonetizing all my videos, because you never know with YouTube.